Next we will discuss the cash flow from investing activity. So in the previous session I have explained the cash flow from investing activity will deals with the inflow and outflow of cash from the non-current assets of a company. The non-current assets include fixed assets, the long-term investment and other assets of the company. Okay, other non-current assets of the company. Okay, so what is the main inflow from investing activity? The main inflow from investing activity is the proceeds from the sale of fixed assets and investments. When we sell investments, we will receive the cash. So that is the inflow from investing activity. And this inflow from investing activity includes one more thing, the income received from investing activities like interest received, dividend received, rent received and all other income from investing activity will also lead to inflow of cash. So the cash flow from investing activity include proceeds from sale of fixed asset. It is an inflow, so it should be added. Proceeds from sale of fixed asset added. Interest income, dividend received, other investment income, also the inflow of the company, so it should be also added. Then what are the outflows? Outflow means when we buy the fixed assets or the investment, we need to pay cash. So it is an outflow. Okay, so in this activity, the outflows are purchase of fixed asset, we have to pay cash. Purchase of investment, again we have to pay cash. So we have to deduct. Then from this we will get the net cash generated or used for the operating activity. Generated means if the net amount is positive, it is treated as generated from investing activity, and if it is negative, that means the fund used for operating activity. Okay, and how can we find the sale amount as well as the purchase amount of fixed asset? For that we need to draw a fixed asset account. Okay, that you have studied in your class 11 fixed asset account like machinery account, investment account, building account, etc. But I will explain once again. Okay, please listen. Fixed asset account, debit and credit. Debit side means the value of fixed asset increases and in the credit side the value decreases. Okay, so first we have to give the opening balance of the fixed asset as to balance brought down, the amount you have to give. Then if there is any sale of fixed asset, the value of fixed asset reduce, so we have to note it as by bank sale amount. Okay, the sale amount we receive. Okay, that will be given in the question. Then if it is on a loss, it should be also the loss means the asset value again decrease. So by loss on sale we have to quote. By depreciation on assets sold. By depreciation during the year of fixed asset. These all are the items which decreases the value of asset, so it should be credited. Then if the asset is sold on a profit, its value increase, so to profit on sale. Okay, and the closing balance also will be given in the question. In the balance sheet we will get the opening asset value as well as the closing asset value. So the closing balance should be given as by balance carried out. So there will be some difference between the debit side and the credit side, and most probably the credit side will be more. So there is a difference, and that difference should be noted as to bank. To bank means the asset we purchase. Okay, so in the debit side if there is any lesser amount, that difference should be marked as to bank. It is treated as purchase of fixed asset. Okay, so first opening balance, then sale details, depreciation, closing balance and the balance figure as to bank purchase of fixed asset. I will give one example. In the balance sheet, the building value the current value is given as current year value 10,000 and the previous year value is given as 3,000. And in the adjustment it is given building sold for 2,000 at a loss of 500. That means we have sold it for 2,000. We will get 2,000 cash, but it was a loss. There is a loss of 500 rupees. Then depreciation during the year was 3,000. And the interest income received is 1,000. Okay. Find the cash flow from investing activity. That is the question. So before preparing the cash flow statement, we have to prepare the fixed asset account, that is building account. Okay. So in the building account, first you have to mark the opening balance. What is the opening balance? Opening balance is given as 3,000. This is the opening balance, that is previous year figure. So to balance brought down 3,000. Then you have to mark closing balance. The closing figure is given as 10,000. So by balance carried out, it is 10,000. Okay. Then we have to check the given details. The building was sold for 2,000. Was sold for 2,000 means we received 2,000 cash. So by bank in bracket sale, you should write 2,000. Then it was sold at a loss of rupees 500. That means loss 500. Then depreciation on sold asset is not given. Then depreciation sold during the depreciation during the year was 3,000. So by depreciation we have to mark it as 3,000. That is asset value false. Okay. There is no profit on sale. Here the credit side is more. The credit side total is 15,500. So that should be marked in the debit side total also. So the difference between debit and credit is 12,500. So the purchase value of fixed asset during the year was 12,500. This is the balance figure. Okay, this is the balance figure. And from this we should prepare investing activity. So cash flow from investing activity, it includes all inflows and outflows of cash. Outflows of cash from investing activity. So first one, proceeds from the sale of fixed asset. So what is the proceed that we received from the sale of fixed asset? It is 2,000 rupees. 2,000. This is the amount we received from sale of fixed asset. There is no proceeds from investing activity. Then interest income is given in the question as 1,000 rupees. So it should be added. Then there is no dividend income. There is no other investment income. And there is purchase of fixed asset. What is the value of purchase of fixed asset? Here to bank, that means cash outflow 12,500. So cash outflow 12,500. Outflow means negative. Okay. Then there is no purchase of investment. Okay. So from this we can find the net cash flow generated or used for investing activity. The amount is 2,000 plus 1,000 minus 12,500. So it is minus 9,500. So this is the net cash used for operating activity. In this way you should prepare the investing cash flow from investing activity. Okay, clear?